This is your Wall Street wake-up call. Disney shares moving lower as ESPN subscribers continue to fall. For more, I'm joined now by Michael Ingram, a market analyst with BGC Partners based in London. So Michael, always good to see you. Profit and revenue rose year over year for Disney, but the big headline for the quarter was its $1 billion stake in BAMTech, which is a streaming service created by MLB, Major League Baseball. Is this enough to calm nervous investors worried about declining ESPN subscribers?
No, I don't think so, Scott. And you can see in the pre-opening that investors are approaching these numbers with some considerable caution, despite the fact that the headline number, by my reckoning, is about a 1 cent beat. So we know that studios are doing absolutely great. They've got Pixar, they've got Marvel, they've got Star Wars, they've got 4 of the top 5 movies in the US so far this year. We also know that the park business is doing really well. They opened Shanghai in June. That's going to contribute meaningfully going forward. But yeah, they really are focusing on that, eking out that 1% gain on the cable business. So, you've got burgeoning ad revenue, affiliate revenue being offset by continued subscriber losses, and also increasing costs of programming. So yes, this BAMTech acquisition, it's 33% stake with an option to go much further in the years ahead, very much to get to revamp their streaming service, get that up and running, get those eyeballs in place and monetizing the IP. But you know, when CEO Bob Iger is talking about a dynamic market ahead, of course, that is sounding some alarm bells for some investors.
Well, do you think these ESPN subscriber losses are a little bit overblown? Because Nielsen says they lost 3.7 million subscribers over the past 12 months. They still have about 88 million. It still reaches 88 million households, and that doesn't include, you know, the subscribers from Dish's Sling, which is an internet streaming service. And as you mentioned, you know, studio revenue was up 40% to about $3 billion.
Yeah, I mean, you're right. I mean, they've obviously got a very substantial cable franchise still, but you've also got the phenomenon of so-called cable shaving, where they're not buying these big and profitable bundles anymore. So I think the subs numbers actually understate the core profitability of the business, and obviously you've got the technologies such as streaming eating into that, and of course that's what this BAMTech acquisition is meant to address, because it is a hole in their platform offering at the moment.
All right, now aside from Disney, moving on to the rest of the markets, we're just about a point away from a new record high in the S&P 500. How would you characterize the markets right now?
It looks to me like a melt-up. So you know, there's very little volume behind this move. I mean, okay, we expect August to be quiet, but my goodness, this is absolutely deathly. I think the US, to some extent, is benefiting from what has effectively been a capitulation on European equities. You know, they had been pursuing for a number of years overweight positions. They've kind of given up on that because the earnings just haven't come through. And of course, you know, how could any discussion about equity markets go without talking about central bankers? There are renewed hopes of even more central bank activism. We're expecting the ECB to extend its QE program next month, only perhaps 1 in 4 chance of the Fed hiking rate next month. And then, of course, we've got the ongoing saga of what the Bank of Japan may or may not be doing. So sure. This is helping to propel markets upwards, you know, a ZERP reach for yield, whichever way you look at it. But, you know, I have to question the fundamental underpinning of this rally, because at the end of the day, yes, we're 90% through earnings season in both Europe and the US. Yes, on paper, these are 4-5% beats for the quarter,
right.
But tellingly, you aren't seeing EPS forecasts for this year or next year going up at all.
All right, Michael Ingram, we'll leave it there from BGC Partners in London. Michael, great to see you. Thanks so much.
Pleasure as always.
I'm Scott Gamm, and you're watching The Street.